Hello, everybody. Today I'm going to talk about Chapter 3, job costing. So first you have to understand that there are two costing systems, process costing and job costing. And then the difference between these two are, for process costing, this kind of costing system we're going to use on mass production of identical atoms, and then we just do a total cost. Then we can apply the total cost and do an average and apply to any single unit. And then the examples are, you can see these tomato cells, and paint and chemical manufacturers, paper products, and the food producers. However, there are different kinds of job costing. When we produce unique custom products or small batches of different products. And for example, if you are Boeing or you are Ford, you cannot produce a plane, airplane, or a car within a day or a month. And then even though your product is not completed yet, you have to record your costs. And then how do we do that? We're gonna need job costing. And then our total costs are accumulated by each job. And then, for example, if you are producing airplanes, then one airplane is one job. And if you're producing cars, maybe one car is a job. We use job costing on like construction companies, shipbuilders, custom furniture manufacturers, and hospitals and professional firms. And then we do a job costing on each job. And then the flow of costs in a manufacturing company. I think we covered this a little bit on Chapter 2, the building blocks of managerial accounting. So on the balance sheet, we know that we have inventory. And then let's go over, review a little bit of the three kinds of companies. Do you remember the three kinds of companies? They are service companies, merchandising, and manufacturing, right? And then service companies, they don't have inventory. They just sell services. And then for merchandising companies, they only have one kind of inventory. They don't produce anything, they buy stuff, and then they sell the same stuff to customers, like retailers. And then for manufacturing companies, you actually produce things. You have to change your inventory from one stage to another. So starts from raw material, and then you will have to put in labor and also have manufacturing overhead. And then after that, you're gonna have work in progress inventory, like the frame of cars, right? And then the engine of the airplane, maybe. And then after that, when you complete your production, then you have finished goods inventory. For example, Ford may have a lot of cars in inventory that haven't been sold yet, okay? So three flow of costs, direct raw material, work in progress, and finished goods. There's three kinds of inventory for manufacturing companies on their balance sheet. And then finished goods. The finished good will go to income statement as cost of goods sold. When you sell your product, when you sell cars, when Ford sells cars, they're gonna record the cost of goods sold from the finished good. Okay, so material requisition. So if you look at that, you can see that what we'll put in work in progress. Basically, we have raw material, we have labor, and a manufacturing overhead. And for each job, it's easy to record like raw material, like how much metal do you use to produce the car, and then it's also very straightforward to record direct labor, like how many workers were working on this project, and then how many hours they worked, and what is their hourly rate, and you can easily get direct labor. And the most complicated is actually the manufacturing overhead, which we are gonna do a lot during this chapter as well as for your first project. Okay, so material requisition. Basically, it's prepared by production department, and then it will itemize materials requested to be transferred to production floor, and then a lot of firms will do this electronically. Okay, and then labor time recorded. Like I said, their how many hours they work on the project, and then their hourly rate. Then you can calculate your direct labor cost on this job. Okay. So job cost record. There are 3 manufacturing costs, which we just mentioned: direct material, direct labor, are traced from material requisition and labor time recorded, but manufacturing overhead must be allocated to the job. So this is an example, okay? Job cost record. You see that we have 2 jobs. We have 1 job, which is 569. And then direct material, we have 2 different kinds of material that we need. And then this is a total direct material. And also direct labor. This is the first worker, and this is the second worker, and he worked for 10 hours, and this works for 5 hours, and then this is their total, okay? Then we are gonna have manufacturing overhead, and then we're gonna do an allocation. And this is the manufacturing overhead that are allocated to this job. Then if we add all these up, direct material, direct labor, and manufacturing overhead, then we're gonna have our total job cost. And then in job 569, we have 25 units in total. And then the cost for every unit in this job is $75. Okay, this is actually the spirit of chapter 3. We're gonna try to do this kind of thing, and then try to estimate your cost for each unit that you produce. Job cost record is a subsidiary ledger to work in progress inventory. So once your job are recorded, job costs are recorded, you can see that job 300 and 303, 306, and there's a total of $1,100, and then these are work in progress inventory. Okay, and then you remember the 3 inventory for manufacturing firms? Yeah, let's go over this again and again. The first is raw material, and then if you put direct labor and overhead to raw material, then you're gonna have work in progress, and then work in progress will go to finished job. Okay, finished goods. Finished goods. Okay, so most important thing in chapter 3, which is the most challenging, is how to allocate manufacturing overhead. So manufacturing overhead is an indirect cost that must be allocated. And then, so this allocation is a way of dividing up the MOH and assigning to the jobs. So why do we do that? So basically, you see that, for example, if in a Ford factory, and you have the Ford is producing maybe F-150, Explorer, every different cars in the same factory, and then you will have depreciation of the equipment or the factory building, and you will also have utilities. And then how can you decide how much of these depreciation and utilities are gonna apply to each job? And then we're gonna use this manufacturing overhead allocation to determine like how much of this depreciation cost or excuse me, or the depreciation costs or utilities are going to be allocated to each job in your inventory, okay? And then we have to select an allocation base. And this allocation base must be cost driver. It is a factor that causes the cost. And sometimes we have some examples here, like direct labor hours, direct labor cost, machine hours, materials used. It depends on the job and depends on your production plan, production lines. So it makes sense because, for example, direct labor hours, the more hours that your worker is working on that product, the more likely that you're gonna use more utilities, and the more likely that you're gonna use more materials, the more likely you are wearing the factory building, okay? So usually in our class, you are not responsible to determine allocation base, and in your problems, you will only need to understand how to allocate manufacturing overhead using the information that is given to you, and usually allocation base will be given to you. How do we allocate overhead? We need to have a predetermined overhead rate, and then you will be responsible. You will be learning how to do this. For predetermined overhead rate, you are going to allocate the overhead to jobs during the year. We usually do that during the year because some of the costs, some of the overhead or seasonal, for example, you will use more AC in summer than in the winter than the other seasons, and then you cannot say your cost is higher, your job cost will be higher in summer and winter, because it's not something that's related to your production, and it will be noisy for your cost analysis. And then, so we're gonna do a predetermined overhead rate during the year, and then use the predetermined overhead rate to calculate the allocated overhead. So try to remember in my in-person classes, I always write down on the board about this predetermined overhead rate for a lot of times. You must pay attention to these words very, very carefully. For if you want to do a predetermined overhead rate, you have to use all these estimated amount, okay? You have to estimate what is the total MOH during this year. At the beginning of the year, you're gonna do an estimate of total MOH to be used all through the year. It's based on maybe your prior experience, and then you have this total estimated MOH amount, and then you also have to have a total estimated allocation base. Okay, like how many direct labor hours you're going to use during the year, or how many of the direct material you're going to use for the year. And then when the allocation base actually happens, that you have direct labor hours, you have labor cost, then you use this predetermined overhead rate times the actual amount of allocation base used. Okay, again, this is very important. If you want to predetermine your overhead rate, you have to use your total estimated MOH and estimated allocation base. But then when you allocate your overhead to jobs, you use the predetermined overhead rate times the actual amount of allocation base. So this is an example, okay? So the first question, determine the predetermined manufacturing overhead rate for the year. So do you remember the word that I say I strengthened a lot? Determine overhead rate equal to. What are the two important words for predetermined overhead rate? Yes, estimated, estimated. So predetermined overhead rate. First, you need to be very careful about allocation base. So what is the allocation base in this question? So let's see, manufacturing estimated manufacturing overhead for the year will be this amount, and then direct labor hours will be worked. Okay, it looks like we only have direct labor hours, and then we will use this as allocation base in this question. So predetermined overhead rate, estimated total MOH divided by estimated allocation base. Okay, if you find these two numbers, estimated is 175,500 divided by 13,000. And then if you calculate this number, let me use my calculator. 175,500 divided by 13,000, 13.5. Okay. So what does that mean? That means for every direct labor hour, one sec. For every direct labor hour, you're gonna have a $13.5 of MOH, okay, manufacturing overhead. All right, so next, determine the amount of manufacturing overhead allocated for the year based on direct labor hours would have been. So MOH, we know how to calculate MOH to allocate to the job. We have to use a predetermined overhead rate times actual. Okay, pay attention. Now we need to use the actual amount of allocation base used. And that will be, what is the predetermined overhead rate? 13.5 times the actual amount of allocation base is 14,500. And then if you calculate that, it's 195,750. Okay. So this is an example of how to do manufacturing overhead allocation. Again, I want to say that again. If you do a predetermined overhead rate, use the total estimated MOH and total estimated allocation base. And then as soon as you have the predetermined overhead rate, you need to times the actual amount of allocation base used, okay? What does that mean? Again, for every direct labor hour that you spend on this job, you're gonna record $13.50 as a manufacturing overhead. And then for this 14,500 direct labor hours that are spent, you will apply $195,750 as a manufacturing overhead. Okay? Okay, so now determine the cost of jobs. Do you remember how many different kinds of costs for each job? Yes, there are 3 different manufacturing costs that we have mentioned a lot of times: direct material, direct labor, and allocated manufacturing overhead. As I said, direct material, you have purchases, and you know, you can record the cost of that. And direct labor, you have the number of hours the workers work on the project, and then their hourly rate. And then allocated manufacturing overhead. We had an example before about that. Let me go over a little bit more this example to help you do this overall job costing. So this company has commercial heating and cooling systems, and then overhead is allocated to each job based on the number of direct labor hours spent on the job. Okay, pay very close attention to here. What red flag just flash in your mind when you read this? The overhead is allocated to each job based on the number of direct labor hours spent on the job. What is direct labor hours? What is it called? Yes, so this is what we call allocation base, right? It's a cost driver. At the beginning of the current year, later estimated that its overhead for coming year would be this amount. It also anticipated using 4,450 direct labor hours for the year. Okay, so how do we calculate the predetermined overhead rate here? Okay, so remember estimated, right? We use estimated and estimated. Estimated total overhead and divided by estimated total direct labor hours, okay? And you find these numbers, total MOH 66,750 divided by 4,450. And I'll just, I'll probably just calculate these numbers. 6 divided by 4,450, 15. Okay, and then we're gonna allocate overhead using the predetermined overhead rate. Do you remember how to allocate overhead? MOH will be equal to predetermined overhead rate times, what is that word? It's actual allocation base. And then if we look at job 101, how many direct labor hours used? 195, correct. So predetermined overhead rate is 15 times 195. And then that is 2,925. And then if we use the same thing to calculate MOH for job 102, it's going to be the same formula and 15 times, how many direct labor hours does job 102 use? 72. And then that is 1,080. All right. So next, we calculate the total job cost for each job, okay? Direct materials and for job 101 and job 102 are 16,000 and 10,500 each. It's over here, okay? It's given. And then direct labor, pay attention here, that is direct labor hours used here, and direct labor hours are not cost. We have to use the average salary per hour to calculate direct labor cost. So direct labor cost for job 101 is 195 times $30. And then that is, let me calculate, 5,850. And then for job 102, it's 72 direct labor hours times 30. which is 2,160. Okay, and the overhead, we have got overhead over here. For job 101 is 2,925, and for 102 is 1,080. Then you're gonna do a total of these three. Then you have your total job cost. Okay, so 16,000 plus 2,925, 24,775. And then for this one, plus 13,740. So this is your total job cost for each of the job. Okay, this is an example of how to determine the cost of each job. How to use this job cost information. Okay, so you can control your cost. Just to analyze, why do you need this kind of, you know, why do you have this so much amount of cost, and whether you can eliminate your cost in the future, and also, you know, what is your estimation performance about MOH? Did you allocate more, or did you allocate too less than what it should be? And there's a problem, so try to control your cost. And also, you need to access the profitability of products, and you need to concentrate on marketing products that yield higher profit margins so that you can make more profit. And also pricing decisions. If you have this job costing, then you will know that how much profits you want to make on each product, and then you can make your decisions whether you're gonna you're gonna set a price and compete with your competitors. Sometimes you will have an offer that they want a discount on some high volume products, and if you have this cost information, you can determine whether accepting this offer will be profitable for you. And also, based on contract, you can use cost and plus a markup on cost and set up your price, and as well as a financial statement preparation. Okay, this is a similar example that we did before. I don't want to go all through this example again, since it's very, very similar, but let me skip all these questions and then go to total manufacturing job is here. The answer is 102,400. And then we're going to just do the last question to help you understand what we just talked about. Why do we use this job information? Okay, this is 102,400. Okay, so say if your job cost is 102,400, total manufacturing cost of your job, and you're gonna want 30% markup on manufacturing cost. So, and then what is your big price? Like, you want to make 30% profits on this product, and then what is your price? So the easiest way is to time 130%, and then you have 133,120. So that means if your price is 133,120, you are gonna make a 30% profit, like gross profit on this product. Okay, and then You see, this problem is trying to help you with direct labor hours allocation base and machine hours allocation base. I don't want to go through all this again, but you need to understand that your manufacturing overhead allocation is greatly determined by the allocation base that you choose. Okay. So another topic is under allocated or over allocated. And this is also important question. Is for it, it's important is because your allocated manufacturing overhead is just an estimation based on the your estimate at the beginning of the year, and it could happen during the year. For example, utility prices are changed, like in the year, I can't remember, it's the year 2017 or 2016, gas price just dropped significantly, and it could also impact your manufacturing overhead allocation. And most of the time, the allocated manufacturing overhead will not be equal to your actual manufacturing overhead. And then if your allocated overhead is greater than actual overhead, then that means you are allocating more, so that is called over allocated. And if your allocated overhead is smaller than your actual overhead, you're doing an under allocation, which is called under allocated. And the way to fix that is, if you are doing an over allocated, if you are over allocated, you are allocating more cost to what you actually have. Okay, and that means you are recording too much cost. Then what do? We will decrease our cost of goods sold. In that way, by the same amount, okay? In that way, you are not misreporting. If I use the word misreporting, it sounds like you are deliberately doing that. But if you decrease your cost of goods sold, that means you are using the actual, amount of manufacturing overhead during the year. And if you are under allocating, that means you allocated your overhead is not enough than what is actually happened. And in this way, you need to increase your cost of goods sold on your income statement. This makes sense is because if you remember, go back to what we had at the beginning of the chapter, cost of goods sold is from your inventory, right? Cost of goods sold is from your inventory, and your inventory has 3 different kinds: the raw material, work in progress, and finished goods. And all these will contain, not all these, work in progress and the finished goods, the what you record will count your manufacturing costs and as well as manufacturing overhead. Okay. So if over or under allocated overhead is a material, or most of the inventory remains, allocate the amount to work in progress, and cost of goods sold. So this is the flow, and I just reminded you of that. Okay. Let me see. Okay, I'm going to give you an example. It's a very small example, but I want to talk a little bit of this over allocated and under allocated. I think you're going to need this information for your project 1. Determine the amount of over allocated or under allocated overhead for a year. Okay. So in this problem, we don't have a total estimated overhead. Is that correct? Oh, I'm sorry, I'm looking at the wrong question. This problem we have, predetermined overhead rate is estimated total overhead. What is your estimated overhead? Oh yeah, you already have the predetermined overhead rate, which is 13.5. So it's given, and then allocated overhead equal to 13.5 times your actual allocation base is 14,500, and then that is I think we calculate that. I'm sorry. The information is given in the question. So this is allocated. It says it's allocated. Company allocated this amount, and then we have to compare that to the actual. So is allocated MOH greater than or less than actual? It's greater than, right? And if we allocated too much, is it over allocated or under allocated? Yes, we over allocated by how much? By 9,000, no, 11,750. And then if we do an over allocated, what do we do? Decrease or increase decrease our cost goods sold. Increase or decrease our cost goods sold. Yes, we will decrease cost goods sold. Okay. Cost of goods sold. Okay. All right. Next is recording manufacturing transactions. Do some journal entries. I think you have this information on your textbook as well. I don't think I'm gonna go over all the details, but just something to highlight. When you purchase new materials, you have raw materials in inventory, and you have accounts payable. You do the debit to credit, and then when you do a purchase, it actually increases your asset. Okay, it increases your asset. It's your current asset. And then once you request these material into your production, then raw material will become work in progress. So you can see the switch in different categories of inventory. That work in progress inventory has a debit, and then that's an increase, and then raw material inventory decreases. And for indirect material, you remember that indirect material are actually a manufacturing overhead. Then we do a manufacturing overhead, a debit, and then we credit raw material inventory. Then we have a decrease in raw material inventory, but we have an increase in manufacturing overhead. Manufacturing overhead is a temporary account. And then actual overhead incurred during the period and increases the manufacturing overhead, but allocated overhead decreases the manufacturing overhead account. Okay, so you can see debit is actual, allocated is a credit. When we record direct labor, we have an increase in work in progress when we have a credit of wages payable. In this way, we increase our work in progress inventory. If you look back here, so this shows you how the raw material inventory transfers, flows to work in progress inventory. And this one shows you how direct labor flows to work in progress inventory, okay? And then we have indirect labor. When this thing happens, you know, actual, when we do an actual, when this thing, the labors happen, and it's the indirect labor, we put manufacturing overhead. And everything that is happening as a manufacturing overhead will cause an increase in manufacturing overhead. And then at the end, we're gonna allocate this manufacturing overhead to our work in progress. So when it makes sense, because when we record our job cost, we will record an allocated manufacturing overhead, okay? And then other actual MOH. So whenever MOH happens, we do a debit of MOH. And then goods will complete and transfer to finished goods. So now you can see that work in progress inventory flows to finished goods, okay? Let me see. I think I'm going to go over this last example just to help you understand what is going on. So just record journal entries, dates, A. I'll talk this a little bit maybe faster. So if you watch the video, you can pause here and then to look at it in detail. So A, what happened? This amount of material purchased on account. So when you purchase a material, you have a debit of more raw material inventory, and you have a credit of accounts payable. And then the amount is 205. And then B, this amount of material were put into production. Of the amount, 146 were used on specific jobs. What does that mean? This amount were used on specific jobs. So that means this material are direct material or indirect material. Correct. These are direct material. So we're gonna do a work in progress inventory of this amount, 146,000. And then we also know that part of this material were not used on specific jobs. And then for this amount, we're gonna do a manufacturing overhead. And the difference is 28,000. And then we're gonna do a credit of raw material inventory. Okay. I hope this makes sense to you. For direct material, so actually there are two journal entries, but we combine together. We have 146,000 direct material, which we directly recorded into work in progress. But we also have 28,000 our indirect material, and we record that as manufacturing overhead, just like we did here, okay? Indirect material, we do a debit of manufacturing overhead, and we do a credit of raw material inventory. Okay, and then C, manufacturing overhead. No, manufacturing labor and salary were this amount, and this amount were charged to jobs. So, okay. Work in progress inventory. We only record direct labor. And then we also have indirect labor, right? Indirect labor is the difference, 10,000. And then we have what? Wages payable, right? Wages payable, which is 210,000. So this is C. Direct labor, indirect labor. Okay. D, depreciation on the plant and equipment was 16,000. Utility bill was received for 1,400. So this is manufacturing overhead actually happened. So we're gonna do a debit overhead, a total of 30,000, and then we're gonna do a credit of accumulated depreciation of 16,000, and also a utilities or accounts payable, which is 14,000. Okay, so this is D and E. 56,000 of manufacturing overhead was allocated to specific jobs. Okay, when we allocate MOH to specific jobs, we have work in progress inventory. Of 56,000, and then manufacturing overhead. And do credit 56,000. Okay, when we allocate manufacturing overhead, we do a credit. Okay. Record the manufacturing overhead transaction on the following T account. Okay, this is fun. Let's see where we use. Okay, first we have here. We record here is indirect material is a debit of 28,000. It's on B. Okay, and then where we record indirect labor, which is 10,000 at C. And also we have D, where manufacturing overhead actually happened is 30,000. And then, okay, I think that's it for the debit. The total is 68,000. And then for credit, we only have one where we allocated our manufacturing overhead, which is 56,000. Okay. So now if you look at it, you can see that we have a balance at our debit side, which is 12,000. Okay. So is it over allocating or under allocating? Which is actual? So this is actual, right? And this is allocating. So is it over allocated or under allocated? Yes, it's under allocated by 12,000. Okay. Assume that the amount determined in request 2 is not material and most of the inventory has been sold. Record an entry to close manufacturing overhead. It's actually asking you what do you do if you are under allocating. Okay. So what do? If it's under allocating, we increase cost of goods sold or decrease cost of goods sold. Yes, we increase cost of goods sold And then we do a credit of manufacturing overhead. So this is 12,000. Okay. If cost of goods sold prior to any adjustment in requirement 3 total 680,000, what is the adjustment adjusted balance in cost of goods sold? Okay, so it's actually asking you, what do you do? So we talked about it in question requirement 3 that we're going to increase our cost of goods sold, right? So now it's going to be 880,000 plus 12,000, and that is 692,000. Okay. Now assume that the wages of direct laborers of 200,000 were erroneously charged to wages expense, treated as a period cost. To simplify this illustration, assume that this company had no beginning, finished goods, or work in progress. Now work in progress units were completed and transferred to finished goods, and they produced 800 units this period and sold 600 units. Okay. How does this error affect the following items? So first you need to understand what is happening here. Direct labor costs were erroneously charged to wages expense and treated as a period cost. So what happened? Do you think what is happening to your production cost? Is it decrease or increase? Yeah, so actually our product cost was understated, right? So product cost was understated by 200,000, and our period cost was overstated by 200,000. So inventory balances actually was understated. However, we produced 800 units and sold six. Give me one sec. This should be 8,000, 6,000. So we produced these units and sold 6,000. How many of these units are still in our inventory? 2,000, right? Yes. So these 2,000 units are still in our inventory. And then how much should have we included in our labor cost? So we understated by, if we allocate it by the total amounts that we understated, we only have 2,000 left in our inventory, while in total it's 8,000. So in total, our inventory balance was understated by 50,000. Does that make sense? Because the understated amount, $200,000 applies to the total of 8,000 units. But in our inventory, we only have 2,000 left. And then if we allocate this amount, our inventory balance is understated by 50,000. Okay, so cost of goods sold. We sold 6,000 units, right? And then we didn't record our production cost was understated. So our cost of goods sold is also understated by 200,000, and we sold 6,000 units of a total of 8,000, and then that is 150,000. Gross profit. for the same amount of revenue, if our cost goods sold is understated, then our gross profit will be, so gross profit equal to total revenue minus cost of goods sold. And then since cost of goods sold is understated by 150,000, gross profit is overstated by 150,000. Okay. So what about operating expenses? So we recorded 200,000 period costs, which shouldn't be period costs, right? So we actually recorded more period cost than we should. So operating expenses are overstated by 200,000. What about operating income? Operating income equals to gross profit minus operating income expenses. And then we can see that gross profit is overstated by 150,000, and the operating expenses were overstated by 200,000. So that means operating expenses were overstated more than is gross profit. So what do you think the result will be? So we are subtracting something that is more than we should, okay? So actually, operating income is understated by 50,000. Does it make sense to you? Okay. So that is pretty much what I want to say about chapter 3 to help you understand how to allocate manufacturing overhead and how to do job costing. If you have any other questions, just feel free to come to our Neider Meyer Scholar or come to my office hour. I'll be happy to help. Best luck for your homework and quiz next week and no projects. Thank you.